Hello, hello, hello. Mic test, mic test. Hello, 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 hello. Hello, 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 hello. Okay, so looks like the microphone is working fine at my end. Okay, so looks like the microphone is. All right, guys. So let's start with the 60th trading opportunity webinar. Guys, my name is Nirav, and as always, we'll let's say begin with the actual legal stuff. So before we start, there's the legal disclaimer suggesting all content presented is pure educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or whatever purpose, you yourselves will be liable for your profit, your loss of profit, or whatever the results may be. So with that out of the way, let me just give you a very quick rundown. So this is the 60th in the series of the trading opportunities webinars that I've been conducting. And if you don't already know, my name is Nirav. I'm the admin and owner of the website and YouTube channel 50 Eyes Market Analysis, where I have been presenting my views for many years, and I have maintained a decent, or not decent, I would say above industry standard accuracy. So here's the website. As you can see on screen, 50is.com. You can see my past work, and past webinars are also posted here, as well as the YouTube channel where we go live and are currently live right now. These days we are going live on Fridays at 2 p.m. GMT. And this particular webinar is the 68th in the series of the trading opportunities webinar, where I go live during market hours and discuss my views on various different markets. Right, lastly, before I begin, here's my quick track record over the past few years where I've maintained accuracy higher than 80%, which is much higher than the industry standards. You can check for yourselves. All the years are listed here with the accuracy numbers listed here, and I don't want to waste any more time on this. The link is 50s.com/forecast accuracy. So now let's just quickly go over what we have on screen here. The chart is of Euro USD. So last time when we were discussing this chart, we were of the view that is the wave Y complete or it has more upside remaining. It was unclear, right? So basically that meant that this wave Y could be here. It could also be that the market will go down and then go up for the wave Y. So now it has remained lower for quite long time. And secondly, if we look at this CN color trend line, which is the light blue color trend line, then you will observe that the market has broken below it. And after the clear break below it, it has almost stayed below it, testing it here and here, testing more bearishness to follow. This is that I'm of the view that it looks like it's a possible zigzag in play here. So a zigzag structure is a structure which looks something like this. And we expect the first leg down, which is the wave A, and the wave C. Not we expect, it's just general guideline that there might be equality among them. So basis that we can say that we expect a movement somewhere near 1.08168 level. So if this is the ABC structure, then this is what we expect. The second thing is that it is possible that the wave B might still be continuing a little bit more. And in that sense, what I basically mean is that we have a test of this trend line here, then another test. Possibly one more test is remaining before the market falls. That's again a possibility. cannot relegate it. So the strategy here comes out to be that we can initiate partial shorts here with the idea that if the market continues the wave be sideways to a little bit up, then we add more shorts, and the targets always will remain the 1:1. That will be, let's say, the target 2. The target 1 will be the break of wave A, which is the minimum we expect this market to give us. As soon as it goes below this wave A low, we have to book at least partial profits. So with that in mind, we have a clear sell setup on Euro USD here, and I think that almost covers it up. So crude oil has done a little bit out of the ordinary stuff here. While we do expect that the wave force can generally go to the 38.2 retracement levels, in this particular case, it looks like a little bit more elongated than it should have been. Let me hide this stuff, by the way. Yeah. So as I was saying, it is looking like a little bit more of. See, the thing is that generally we expect that the wave 4 will end near the wave 4 of one lesser degree, right? So it should have ended somewhere here. However, it went quite lower than that, so that is the unusual thing here. But long story short, it still is only at 38.2, so we do expect a reversal at this point in time. So again, partial longs can be initiated here, but I think it is better to wait for some sort of confirmation, because in case we have what do you call we have to do a recount of this thing. It is also possible to count this whole thing starting from here to here as an impulse complete, in which case this leg down might be this A and the B and the C. One second. The A and the B and the C, which would suggest or which would clarify this big leg down. So this is a secondary possibility that this is the A, B, C and the impulse is already complete here. The current possibility does suggest that this is just the wave 4 and the wave 5 up is still remaining. So, and do keep in mind, even in the case it is heading for a zigzag, it will still have one up, or the upcoming leg should still be impulsive. That is our take on WTI's crude oil right now. So I personally think I should wait a little bit on this counter for more clarity to ensue, because both of these counts are looking sort of possible, and this market has not really clarified much of anything to be clear here. So a little bit wait and watch while keeping both scenarios in mind. And one little thing or a little clarity we have is that if the market goes lower than the 38.2 level, which is currently around 77.07, then starts to sustain below it, that is continues forming bearish candles below this level, then it would suggest that perhaps this market is heading as the zigzag count, and in which case we will not be entering any longs anytime soon. So long story short is, if the market goes below the 77.07 level, actually the 38 dot retracement level I should say, then we will avoid any kinds of longs on this counter. And if we see some strength, we wait for it. If we do see it in the coming sessions, then we will be looking for longs. So wait and watch for CL with these points in mind. Gold, last time when we were looking at this counter, I remember it was a little bit below this trend line. However, we did not at that time had any clear confirmation if this market was going to go back up. I think it was somewhere here when we were doing the discussion. So we did not have any clarity if it will go back up into it, into the panel, or will it continue lower. Now we have the answer, and it looks like it has completed the impulse already here. So it looks like it has completed the impulse already here, and it does seem to be suggesting that we are currently in a sideways correction. So what we have here is a flat kind of a correction. Let me zoom in here. So this is the starting point of the flat correction. If we have the wave A over here, then the wave B might either be complete here or it might be continuing sideways, like I have labeled as B's remaining sideways. In any either of the cases, we expect the market go further lower and to the expected level of 1945.55. Right. So even if the B is here, we still expect the market to go to 1945, and even if not, then over here, then it can even go much lower, a little bit more lower than 1945. Actually, not much lower. So let's discuss this count in a little bit more detail again. So if it is continuing as a flat correction, then the flat wave B can itself become complex, or it can also become a flat correction. So it does seem to be the case where this is the A of the B double bracketed and this is the B of the B double bracketed and possibly still continuing perhaps as a triangle. And if it's a triangle, then the breakthrough downside is expected to be a little bit stronger than the minimum target I have suggested around 1945. So these are the two main outlooks on what we expect the downside to be and why. Now, targets below 1945 would be immediately pegged at 1918 to 1891 level. Because this is the 60% retracement, I believe. Let's just quickly check as well. Yep. So we have the 50-60 retracement level pegged around that level. So do note those targets as well. So with that in mind, for now, gold will be looking for only short setups here, right? And the only time I'll be interested in longs is that if the market goes near the last high, which is let's say around 2040 or higher levels. Pretty simple for gold. Let's have a quick look at S&P now. So S&P last time when we discussed our view was that wave 5 might be in play or coming in play. And it does look like maybe it is over, or the secondary hypothesis I have is that the wave 4 is still under play. So what I'm really talking about here is that if we look at this structure from the point of reference around the price level of 3807 roughly speaking, we have an impulse to the upside, and this is the first leg up, the second leg down, third leg, and I'm expecting that the fourth leg is continuing still in time sideways. So because we know that impulse is a structure which would look roughly like this. Now, if that is the case, then we have a very clear setup here. As soon as the market goes near the high of 4162, we expect that the wave 5 up longs should be initiated. And do keep in mind, I'm using this data feed. Your data feed may be different, leading to a little bit different price. So do check at your end accordingly. But with this data feed, this is what looks to be the initiating price for the wave 5 longs for conservative setup. Aggressively, of course, you can enter just right now and place the stops below 4067. Long story short, we are looking for wave 5 up longs. I have discussed both aggressive as well as conservative setup, but that is just the case for upside here. And yeah, as I said, because this is the downside, stop loss at 4069. Below this, we will say that the 4 was already complete. The 5 was already complete. So that is why I am in favor of waiting and watching for the conservative setup to push its sells, trigger its sells, and only then longs will be a better idea. Because as we can see, the wave 5 being complete also itself is valid, and maybe that is the actual count which is in play. So nothing much to add on S&P. wait for the mentioned level for possible longs. Now we have Nifty chart on screen right now, and we already know that in Nifty we were expecting some sort of pullback since quite some time, which we had not gotten. But now that we have the first big leg down here, we are thinking that one leg more down is to follow this one. And what is this really suggesting? It is suggesting a possible zigzag kind of correction for the possible wave 4, which we think might be in play right here. So basically, we are expecting the market can go to 17477 level, right, which will be perfectly valid for a possible reversal zone. So long story short, we expect the market to go to that level and then possibly form a reversal. Anytime the market goes higher than the 17,830 level, we will be interested in longs. But until then, this is what we think is the expected progression. It is sort of in line with our view on the S&Ps as well. So it fits perfectly well with our global scenarios. So in that case, I think it is also a complete discussion in itself, or a completed discussion itself, I should say. With that, let's just head over to BTC. Last time when we discussed the chart of BTC, it was on, let me just quickly check. It was, yeah, it was 14th of April. So the market was somewhere here, right? And we already had these trend lines drawn, and the idea was that these are the 2-4 trend lines. So if the market has the wave 5 under continuation, it should remain within these trend lines, that is above it. And we had discussed the upside targets already. But if the market breaks and sustains below this CN trend line, then we will have to consider the possibility that the wave 5 is complete. Now it has clearly gone ahead and broken below the trend line, which basically suggests that the impulse to the upside is complete now. Let's see which impulse are we talking about here, because I have a lot of different counts here. 345 for one up, two down, and then 345. Let me just quickly check one more thing here. Okay. Well, it does look like a very weird kind of count, but this one which we have on screen right now is suggesting that this is the 1, the 2, the 3, the 4, and the 5 complete. It is a little bit awkward looking because the wave 5 looks to be very small compared to the wave 1. So I'm of the view that this may not be the right count for this counter. Right, if it is the count, but we will discuss the alternate view right after it. But if this is the count, then we can expect a correction in the downward direction, which can take the market to 50% or 61.8 of this whole leg, which, let's quickly check, is currently around 23,292. Right. So in case this actually is the count, then this market can go to 23,300 something to 21,440 something. However, as I said, the wave 5 looks so way too small. So I am of the view that perhaps That is not the right count, and maybe this is the dot one currently following a correction for the dot two, which will later be followed by an up leg, right? That is again the second possibility, which would suggest that this market can see correction. Taking it between somewhere between 25,270 to 23,950. So, long story short is that no matter which case Bitcoin is playing, either the extreme bearish one or the less bearish one, more downside is open for this counter, right? And also, I have noticed one more thing here that this market generally is known to form some wild or volatile counts. So, in that case, just keep in mind it is not required to follow and go down to the mentioned 50-60% retracement levels. If it does not do that, again, any movement about 30,626 would suggest more bullishness to follow, that is short term longs to follow, in which case we can also consider that we have a very small wave too, which is already complete here. So that is a take on BDC, and with that we have discussed all the charts we discuss on regular basis. Do make sure to hit the like button, guys, if you enjoyed the content, and do not forget to share it with your friends, colleagues, or in groups where you think people will find it of use. And that was it for this discussion. I'll see you in the next one, guys. Thank you.